What's up everyone, it's Karthik with MoneyVest. So I am recording this video absolutely exhausted at almost 3 in the morning. We just covered almost a 3-hour live stream to go over the earnings call for Enphase. It was one of the longest earnings calls that I've ever been a part of, and the stock is obviously not doing well. It is now down to low $80 a share, a little bit over 12.5% sell-off right now for Enphase. If you want my full detailed analysis, go over to my most recent live stream. And in the last 9 minutes, you will find a complete detailed overview of Enphase, the stock itself, and my thoughts on the company right now. Of course, after they reported the third quarter 2024 numbers. I'm going to keep this market update nice and short. I'm not going to be spending too much time because I'm honestly too exhausted to go over every single stock here in this market update. So I do apologize. And the earnings season is now ramping up very, very aggressively, right? So if you come over to our platform, if you come over to the market calendar, we essentially wrapped up all these companies today. I was live for Lockheed Martin. I was live for Enphase as well. And then tomorrow we're going to be going over Coca-Cola. That's going to be pre-market. And then Tesla. It's going to be the super important earnings for tomorrow. We do have other companies reporting, like for example, Lam Research, I know is going to gain a lot of interest more recently as it has been selling off. And then we have the CME Group, and that's going to be for the most part some of the companies that I'm going to be interested in for tomorrow. So we got AT&T, ServiceNow, Nextera Energy, IBM, Lam Research, then we got T-Mobile, and then of course Coca-Cola and Tesla. They're very, very light on the economic calendar, so as you know that we don't have any high impact items scheduled for this week. Next week though, we do have GDP numbers, the JOLTS numbers, and once again, looks like there's going to be the unemployment numbers because it's the first Friday of the month of November. So my birthday month is coming up. I'm going to be 28 very, very soon. So we do have unemployment numbers coming out next week. So it's going to be a very, very important week from an economic standpoint as well as an earnings standpoint, because if you come over to the earnings for next week, of course, we are pretty packed with Google, Microsoft, Apple, Amazon, MasterCard, AMD, Visa, all the big techs reporting in the coming weeks here. So tomorrow, get ready for Tesla and Coca-Cola. I will be live for both of them. Market updates are going to be shorter right now because of the longer live streams that we're going to be doing for the earnings calls. But nonetheless, thank you so much for being a part of our community. Link's going to be down below if you want to join, of course, be a part of our MoneyVest community. And I'm just going to open up our internal beta to go over the actual MoneyVest index. And right now we're sitting at 3.83. So we are still in optimism right now as per the MoneyVest index. And these are the different levels that helps us identify where the market positioning is. I've also added this sort of text here, which I think is very, very important because the MoneyVest index is an index created by MoneyVest, which represents the favorability of risk and reward in the market. We utilize a lot of different technical volatility and market breadth indicators to arrive at this index value that you see every day. And again, this is available for all the members now. We're going to be pushing it to production either today or tomorrow. So we're going to make the announcement that it's live on the actual moneyvest.com website. I'm just testing it out on the internal beta here for the next day or two. And it's going to be available for all the members. We're super excited for this. So if you want to join and lock this price in, because as we add more features, the prices are going to go up, right? So we're going to be increasing some prices for the platform because we are just adding a lot of wealth of data here, a lot of analysis and research for all of you. So it's going to be very useful. So if you want to lock this price in for a 16% annual discount, that's also available. Link's going to be down below. There's a few more spots left. I also want to mention the MoneyVest Index is not a buy or sell signal, and it does not recommend any action, right? So it's simply just an index value that you can use as a market gauge of risk and reward. Markets are assumed to be in a state of panic if the index value drops below 2, and in a state of euphoria if the index value trades above 4.5. And again, this index will continue to get refined over time as we analyze more data sets. But as per our initial backtesting, the MoneyVest Index has yielded a very strong track record of performance, and use this index at your own risk because, like I said, it's been very useful for myself, but use it at your own discretion and see how it fits in your personal strategy. So consider this as our very own fear and greed index, which is now available on our very own moneyvest.com platform. So Microsoft seeing a little bit of a recovery back up. We did have Nvidia being very flat, Apple flat, Google and Meta pushing higher, Amazon very flat, Tesla also slightly down about 40 basis points ahead of their earnings. AMD was selling off a little bit over 2.4, Qualcomm pushing up 2.4. So a little bit of a flip there. And then we had industrials selling off quite aggressively with Lockheed Martin after the earnings, even though they reported some very strong numbers. And again, backlog hitting a record high of $166 billion, still dropping over 6%. I calculated my fair value on Lockheed Martin at around $450 to $480 a share. Right now, still overvalued at $576. General Electric also dropping over 9%. They also reported their numbers. So if you come over to the earnings here, so we had a revenue miss of $9 billion, just under $9 billion, and an EPS beat of $1.15 per share for the company. So today we had a lot of aerospace and defense company and some industrial companies, and tomorrow we have L3 Harris also reporting their numbers. So that is also going to be on the schedule for later this week. Now, coming over to some of the other measures, like volatility here continues to slide lower, just a little bit over 18 at the moment. Elections around the corner, FOMC meetings around the corner. So if you come over to the calendar, and you'll notice that November 7th is when the next FOMC meeting is. So there you go, Fed interest rate decision, Fed press conference at 2:30 p.m. Eastern. That's going to be on Thursday, November 7th. That is also very, very important, perhaps one of the most important days for the market in the next couple of weeks here. And not to mention, we also have elections on Tuesday, November 5th. So just get ready. There's a lot of catalysts that are coming up for the markets here. Gold prices hitting a record high at $2,747 per ounce. So I will continue to be an advocate for gold prices, as I think this is where a lot of liquidity is also flooding to, as the yields are pushing up. So we did see the yields cross over 4.2%. So we got the 10-year treasury sitting at 4.2% yet again. I think that's also putting a lot of pressure on technology stocks, growth stocks, and as a result, we're seeing, again, a little bit of that underperformance in technology once again. So staples, energy, real estate, communication services, all these sectors pushing higher, with industrials, of course, selling off quite a bit. Utilities was down, discretionaries were down, technology essentially flat on the day. So there's been a lot of rotation back and forth between utilities and technologies. And of course, when it comes to performance on a year-to-date basis, 29%. For utilities, and technology is down here at 22%. So that differential is still at well over 7% right now. I also want to go over what I shared in our Discord for the options portfolio as well, because the options portfolio is now doing really well, up a little bit over 30% officially. So this right here is what I mentioned in our Discord earlier today, because we've got a very, very disciplined approach to investing. So I essentially mentioned options portfolio now officially up 30% year to date, way above target, because my target's closer to 20%. And so happy to see that. But beware, 2024 has been a very strong year for the markets. My main objective is to limit down on volatility and focus primarily on risk, and return will take care of itself. So primarily focusing on risk, and the return will take care of itself. Discipline over profits always. Long-term portfolio is up 27% also. And with 49 trading days left in 2024, now 48 after today, let's remain disciplined, patient, and focused on the mission of closing out the year strong. So S&P is up over 23%. Portfolio is up 30%, doing pretty well on a lot less volatility. And I'll take that any year in the markets. Now, coming over to individual stocks, starting with, indices first, S&P 500 here. Very, very flat. So consolidating sideways at the moment. So a little bit down about 5 basis points at the moment. Support level is going to stay put right about here, 57.65, down to as low as 56.70. And of course, we got a resistance and pretty much the next target that a lot of people are forecasting, up to as much as 6,000 for the S&P. And of course, talking a little bit about the NASDAQ as well, continues to trade inside this uptrending channel, right? So higher highs and higher lows coming in, with a very strong resistance sitting roughly at 18,600 for the NASDAQ. And support level is going to stay put at 17,700 as well. So very quickly, I'm going to break down some other ETFs for individual stocks. We are going to be talking about that in our next update or our Market Open live stream. So a lot of the technical updates on individual stocks, I will be talking about it during Market Open live streams. Like I said, these market updates may get shorter over the next month or two because of the earnings season, because of the late night earnings calls that we're going to be streaming live. Now, when it comes to IWM, as you guys know that I am pretty bullish on IWM, and this right here seems to be a pretty nice ascending triangle pattern, or also a little bit of an ascending support or higher low that's coming in. So this right here could be a nice little support for IWM where it could validate that ascending support and of course rotate back up to 226, 227. This is a level that we are once again getting rejected at, something that we have struggled for IWM in and around these levels at 226, 227, and that's exactly where we are at right now for IWM, for small caps. Now TLT continues to sell off. We're starting to see a little bit of a breakdown from this support here. This was a level at roughly around $93, $94, and there's going to be a few more support levels to keep in mind. Another really strong level is going to be closer to 89, so basically just a little bit under $90, down to as low as $87 for TLT. So we're seeing a little bit of a pullback right now. Very, very oversold market on the RSI and the MACD, as the bond market continues to be one of the worst performing markets in a very long time, as the 10-year treasuries rotate back up to over 4.2%. I think that's really going to be dampening some of that equity outperformance that we're used to seeing in 2024. Because rates are climbing back above 4.2%, I think from a risk-adjusted standpoint, they actually are going to attract a little bit of capital away from equities, because it becomes a safer, less volatile trade, so to speak, for some of the bigger whales, institutional investors, pension funds, sovereign funds, so on and so forth. So if equity, if yields on the treasuries continue to go higher, equity performance is going to deteriorate, in my opinion, as again, the attractiveness is going to shift a little bit more towards the bond market, right? So TLT right now, of course, selling off, but the lower it gets, the better the risk reward becomes, as I've said this before. And eventually, if there's going to be more rate cuts from the Federal Reserve, then the 10-year treasuries have the potential to rotate back down. However, a lot of that, of course, depends on the deficits of the U.S. government continues to run up, and also the inflation expectations and economic growth related to the GDP of the United States. So a lot of factors at play here, but right now 4.2% definitely not helping the situation for equities to eclipse up to over 6,000 target of their all-time highs. That's the target that many analysts have on Wall Street. So that's going to be it for today's update. I do appreciate you guys, and thank you so much for being a part of our community. Again, appreciate your patience. These updates may be a little bit shorter, but I promise we're going to be covering a lot of technical updates during our Market Open live streams. But all in all, the markets continue to be in a little bit of an optimism situation right now, with 3.83 is the MoneyVest index, and volatility here continues to be a little bit under 19, so just over 18 levels at the moment. So for me, when it comes to dollar cost averaging, ETFs are fine, indexes are fine, aggregated indexes are fine. But of course, when it comes to individual stocks, I'm going to be a lot more cautious right now, considering that, almost everything is well within a dip or near all-time highs. Like, for example, Nvidia, Netflix, Apple, even Meta Platforms, and Broadcom. A lot of stocks are trading well within 1 to 2% of their all-time highs, and all the major indices, including a lot of sector indices, are well within 1 to 2% of all-time highs. Real estate sector, for some reason, it still shows it's in a correction. Let me just quickly double check. XLRE, I think it's trading near all-time highs again, but let me just double check here. So probably not. So all-time highs down to where it is, 7.7%. So we may have to update that number, because it's only really down 7% from its all-time highs from back in 2021. Other than that, we don't really have anything else that's in a correction. It's either in a dip or a pullback. So this is a very, very strong market. And like I said, on the day here, small $22 billion sell-off, and the top leaders were Microsoft, $65 billion gain, Philip Morris, Meta Platforms, Google, Walmart, Amazon pushing higher. And the biggest loser on the day was General Electric. Big sell-off, $19 billion sell-off here, followed by Apple and Verizon, and Lockheed Martin also selling off over $9 billion as well. So hope you all enjoyed this video and found it helpful. Make sure that you drop a like, and don't forget to subscribe to the channel. Again, if you're interested in joining us, link's going to be down below. Patreon/MoneyVest, patreon.com/MoneyVest if you're interested in joining. A couple more spots left, and you can pretty much access all the members-only videos, MoneyVest's website, all the additional features at no cost. It's going to be locked in forever. That whatever, $29 a month, and of course you get access to all the trade alerts and the options portfolio as well. So links going to be down below. We'd love to have you on board, and as always, happy investing. I'll see you all in the next video.